Welcome to Key Stock and Crypto Channel.
And we had stocks down again. We had the NASDAQ slightly up. Now everyone is saying that we're in a bear market. And right now, most people are saying that we're in a recession. The American investors have lost over $9 trillion. And we know that's 401ks, pensions, stocks, mutual funds. And we have BlackRock, which we know owns everything along with Vanguard. Says is shunning stocks because of economic pain ahead because of the central banks. And we know the central banks are raising rates, shrinking the balance sheet, and this is all across the globe. So there's definitely pain, and then plus we have a strong dollar, and that is definitely hurting the emerging markets. We see the Chinese yuan at the weakest in 14 years, but guys, we know that it's a benefit for China because we know they want their yuan weak, so then therefore exports are cheaper. And especially with the strong dollar, these corporations are benefiting. Don't let them tell you anything else. Now we had Jerome Powell in the house, but he was over in the EU's house talking about stable coins and CBDCs. And right now they're ramping up talk about regulation, getting Congress to start moving forward. Now, I did a video called Biden's EV stocks about 2 weeks ago. We know the Inflation Reduction Act was passed, and we know that bill is all about building a new economy, the digital economy. We have all 50 states get green light to build EV charging stations. Now, the White House had a memo of all the companies that are going to benefit from the EV charging stations. So guys, they're letting you know, but remember, this is an investment. This is not quick money. I'm not your financial advisor, not financial advice. Please do your own research. You definitely have to have patience, but you know the new digital economy is going to take time. Now we have Hertz is teaming up with oil giant BP to install thousands of EV charging stations. And guys, just to remind you of the actual C word, where all these companies, they let us know what stocks they were going to be buying. Now this time go around, they're letting us know who's going to be benefiting from the fourth industrial revolution. And like I stated, guys, this is all about investing. You're going to have to wait 5 years to get the benefit from your investment. And basically, speaking of returns on investments, we have Cathie Wood is still bullish on Tesla, and we know Tesla is one of them that's on that list of the Biden White House memo. We have Roku and Bitcoin. The only reason why I would be bullish on Roku if somebody was to buy them. Now we have Intel introduces video game graphic chips to challenge Nvidia. And again, where is Intel? Inside the Biden bill. They're going to be benefiting and getting billions and billions of dollars. And don't forget, Intel definitely has a dividend. Now we have Fannie Mae launches rent payment reporting program to help renters build credit. But on the flip side, we have home buyers are backing out of deals at record pace because of the higher rates. And if you look at a 6% interest rate and you go back in history, 6% is not bad. But unfortunately, property values have went through the roof, which makes 6% horrible. Because you'll be paying an extra $1,000 if you're getting a $300,000 and $400,000 home. Now we have Ian that's supposed to hit Florida. And the reason why I'm bringing this up, guys, because don't forget when it comes to supply chain, we have Amazon is going to be temporarily closing a couple warehouses. But there's a few companies that are going to be temporarily closed. And we also have some events that are going to be postponed because of the hurricane. Now, a couple of these events are not even in Florida, but they're being postponed, which makes no sense whatsoever. But let's get into the actual indicators, guys. We had yield rates rise, which we saw the stock market started off great, but ended up in a negative. And then, of course, guys, we had the dollar is still staying strong, and we had the VIX up. And we know the VIX is always going to let us know what type of volatility that we have in the market. Do not forget that. But guys, that's all I have for you. Have a great day.
With some kind of false bravado I don't think what Chairman Powell is doing is similar to what Paul Volcker did. Paul Volcker really was targeting the money supply. He let interest rates go wherever they had to go. In October 1980, the FOMC directive said that the federal funds target would be between 8 and 14%. The point being, the Fed was selling off its securities to move the interest rate. This Fed is doing something very different. They are paying a record high interest rate on a record high pile of cash kept at the Fed, effectively bribing commercial banks and money market funds to keep that money from doing anything productive. Keep it in cash in a risk-free government guaranteed account, receiving over 3% now, maybe 4.5% by the end of the year. I mean, as little sense as it made to pay people not to work, now our central bank is paying banks not to lend and paying money market funds not to allow their cash to finance productive investment in the real economy.
Today, you're announcing the launch of ARK's venture fund. We're going to get to that in a second. But first, we want to talk about the broader markets here in London. This morning, we saw the pound reach a low against the dollar. I want to get your sense of where we are in this economic cycle, if we could. And really, I think, given the conversation we've been having all morning, has inflation peaked?
Yes. Well, it's very interesting to hear people saying that we'll be able to skirt recession. We believe we are in a recession. The durable goods orders we just saw, really we're seeing the strength there because of activity being attracted to the U.S., a flight to safety. That's why our dollar's been going up as well. Nonetheless, we think we are in a recession. We're seeing tremendous demand destruction. You see demand for gasoline over the summer down to 25-year lows, 1997. Think about that. So lots of demand destruction, and we believe it will continue. The good news here is to hear Michael Evans this morning talking about, hey, we're all on the same page. This could be done in the first 3 months of next year. Well, if the market is the discounting mechanism that it should be, then it should be discounting the peak in interest rates. Yes, inflation peaked. We believe core inflation peaked at 5.3%. This is the PCE deflator that the Fed supposedly pays the most attention to, 5.3 in February. It's down to 4.6. And with all of the price declines that we are seeing out there, whether it's in retail because of too much inventory or way up the pipeline with commodities really falling out of bed, all of them, we think the inflation rate is going to be surprisingly low. We would not be surprised to see deflation month to month sequentially for a number of months during the next 6 months.
What turns things? Right now, the conventional wisdom, you're already saying we're in a recession. The conventional wisdom or prevailing view is that we're headed into a recession if we're not in one right now, and it gets worse, not better. You're saying that there's going to be a turn, and I'm trying to understand what is that pivot point, the inflection point that moves things in that direction.
Sure. We think employment is going to come down and the unemployment rate up. The Fed thinks so as well. That's a lagging indicator, a big lagging indicator. And we do believe that CPI-based inflation, especially because of energy, food's sticky, no question about it, but energy prices are coming down against all expectations. I would also say, there's so much bearishness in the market. Today, we see Goldman Sachs and BlackRock saying, sell equities. Oh, my goodness. This is like, I remember, this was very early in my career, 1982, Business Week magazine on the front cover saying, equities are dead. And now you have some of the biggest houses out there who would tend to benefit from a positive equity market saying, equities, don't go there. We think that the surprises, again, both inflation and interest rates are going to be significant to the downside. And we do think, even though we are in a recession, that it won't be as extensive. It's going to be much more of an inventory recession as we get interest rates and inflation down.